RBI Governor Raghuram Rajan decided to stick to script, cutting rates by 0.25%, but this time also flushing banks with extra liquidity or cash so that they can pass on the rate cuts to consumers. But the stock markets weren't impressed. Good news for people with loans or seeking loans. At least that's what the RBI governor hopes. Not only has Raghuram Rajan cut interest rates by 0.25% to 6.5%, he has also changed policy to leave more money with banks, asking them once again to pass the benefit to consumers.
Our attention in recent months has turned to seeing that this large quantum of rate cuts is passed through into borrowing rates. Policy action is significantly greater today than just another 25 basis point cut.
While RBI under Rajan has cut interest rates by 1.5%, including today's, the main banks have cut rates for ordinary folk only by an average of 0.66%. But markets and India Inc. are disappointed by the size of the rate cut. Sensex today ended 516 points down. Nifty closed 155 points in the red. Industry body ASSOCHAM also said in a statement, policy interest rate cut should have been bolder.
We believe that with the rate cut that has been effected is that it will be a really good stimulus for the economy.
For now, Raghuram Rajan has done his bit. Going forward, he will keep a close eye on the monsoon before delivering any more rate cuts. Shweta Rajpalkoli, NDTV. And the big question, of course, remains, will consumers feel the benefit of this rate cut or not? Joining us for more on that, Siddharth Birla, past president, FICCI, and Madan Sabnavis, well-known economist. Thank you both for joining us. Madan Sabnavis, let me come to you first to get an overall sense of what this rate cut means for the average citizen of this country, a home loan seeker, someone who's an existing home loan borrower. Are we going to see our rates coming down? The governor certainly hopes so.
No, I think that's right, because even in the past we have seen that every time the RBI has cut rates, the lending rate for consumers comes down, especially for mortgages. So I think that will be positive news as far as consumers are concerned. But I think on this particular issue, I think what we are missing is that when for lending rates to come down, your deposit rates also have to come down. Right. And what we have seen is that households have been repelled by bank deposits in the last couple of months, ever since rates have been lowered. So I think we will have a problem more on the savings side. On the lending side, definitely I think the consumers are better off. So it depends upon whether you're a saver or whether you're a borrower. If you're a borrower, you're definitely going to be better off because this transmission is fairly smooth.
Okay, the transmission will be fairly smooth. Before I go across to Siddharth Birla, Madan Sabnavis, quantify it for our viewers how much of it will actually translate, because as the governor said that this time around he's not just delivered a rate cut, he's also taken a number of other policy moves, flushing banks with extra liquidity, which will ensure that they pass through. He has been disappointed so far with the kind of transmission that has happened, and so have consumers.
No, I think in terms of liquidity, we are going to see something like 20,000 crores, which is going to be released into the system. But to my mind, that will take care more of market sentiments rather than the actual ability to lend and to lend at lower costs. It's going to be the repo rate itself through the new system of marginal cost lending rate, which has been started from April 1st, where they're going to see the benefit coming in terms of lending the borrowing rates for, say, households. And what we have seen is that a 25 basis points cut at the margin will probably lower rates by around 5 to 10 basis points, nothing more than that. But it all depends on whether they first lower the deposit rates, because if the deposit rates don't come down, then they won't be obliged in terms of the marginal cost lending rate to lower their lending rate. So it's all contingent on whether they're going to be bold enough to reduce the deposit rate first.
Right.
Because if you do that, you could just scare away the deposit holders and your deposits may come down. And if you're able to do that, then you could lower the lending rate.
All right, I'll talk a little more in detail about deposit rates, the impact that it will have on savers, and of course, what the finance minister's view is on that. But let me go across now to Siddharth Birla to understand the impact of today's policy move on the industry and the economy. Mr. Birla, the industry has been very candid in saying, thank you for giving us the rate cut, but you could have given us more.
Shweta, I think we've discussed this on many of your programs. See, the governor can only set the stage looking at the state of the economy and the state of the spending and the liquidity in the system. I think this time around he's done a very comprehensive job of not only signaling the repo rate cut, but also providing liquidity into the system. So therefore, I think the banks will have very little room not to implement cuts on the saving side, on the borrowing side, and pass on the savings, because even 6 months ago when the governor made the last cut, the savings were not all passed on to the consumers.
Right.
And by now, I think with the today's 1.5%, the total 1.5% cut since 2015, I think we are still sitting on a 60 to 70 basis point cut on the lending rates.
Okay, I'll just quickly take that to Madan
half.
Sabnavis to get the economist's view. Would you agree with that?
Yeah.
That that's the kind of gap that exists, and now, of course, Siddharth Birla saying that they will have enough room, but there's almost a nudge coming once again from the RBI governor, and he will be watching very quickly because, if you heard his press statement today, he made it very clear. So far, the excuse with the banks was liquidity conditions are tight. So he's done both. It's a two-pronged attack, and this time they're not left with any choice but to pass it on. Madan, very quick view on what Siddharth Birla is saying.
No, I don't think it's a case of left with no choice. See, there is a formula which has been laid down. So banks will have to follow it in case their deposit costs come down, and then you will have to lower your lending rates. But the whole issue is that today, if you see, the major problem is that banks are playing around with fairly high spreads compared to what we see globally at around 3.5%, and they're not willing to compromise on that. So you don't want to lower the lending rates. At the same time, you're very keen to lower the deposit rates. So I think that's why we have this conundrum in our system.
All right, conundrum there in the system. Siddharth Birla, coming back to the impact on the industry, high interest rates are always an impediment, not just for consumers who are looking at buying homes or cars. They're also an impediment for industry to go ahead and invest. So private investment still continues to be very, very weak. There seems to be a sense coming from the government that they've almost given up on that aspect. The RBI today doing its bit in terms of lowering rates, but do you think it's enough to kind of fuel that investment cycle to make sure that the private sector starts spending?
Shweta, I think, as a businessman, you're looking at the interest rate in two parts. One is what happens to the consumer markets, and the second is what happens to your investment cycle. I think the prime thing that we are all looking for is a resurrection of the consumption cycle, because until demand picks up, until then, the new investment, the interest cost on a new investment will be only theoretical, because people will not put in a new investment until the demand is picked up. So I think with the lowering of interest rate, the first thing that you're looking at is a demand revival, particularly in areas of, let's say, auto consumption or, consumer durables or even housing. And housing in itself will have a lot of multiplier effect on a number of goods. So really speaking, you're looking at a broad base, because if you look at the budget also tried to revive demand through infrastructural spending, particularly in the rural areas. At the same time, for the urban areas and for people who are borrowing on EMIs, if you can bring down the interest rates, I think it is going to be the consumption cycle will pick up, and therefore people can look forward to an investment cycle. I think it's the interest cost on the investment cycle, it's too early to look at that. That is number one. Number two, I think very clearly the RBI governor can only do so much in terms of policy action, which he has signaled, and he has now taken away, according to me, this excuse of banks not having enough liquidity. So he is given a sort of a more comprehensive package. I think really speaking, the ball is equally now in the court of the government, which exercises effective management control over the banks. So I think the government also has to see that the banks get their house in order, bring down the other deposit rates and other things, and actually pass on the full impact of the interest rate cuts which the RBI governor has signaled.